We're just a week into the new year and there is new hope for economic growth. A survey released this morning reveals 2 out of 3 businesses are optimistic about the coming year and many plan to borrow more to expand.
Down in Bradstreet's Stephen Koukoulas joins us now from Canberra. Stephen, tell us what in this data gets you hopeful this morning?
Yeah, it's a continuation of the positive trend that we saw at the end of last year. The survey of business people suggests that sales and profitability will be stronger in the early months of 2014, and even the things that were causing some concern, employment and business investment, are also looking stronger. So basically it's a survey that's suggesting 2014 will be quite a strong year for the economy.
OK, and break it down for us and tell us exactly what it goes into, the likelihood of businesses to put on staff, those type of things, and how accurate can it be?
Yeah, look, the survey breaks it down into 5 main components, and the first one, the one that matters most, I guess, is expected sales. So if firms are selling more product, they're probably going to be making money and hiring people. So that's extremely positive. That's at one of its strongest reading in about 3 years. So that's suggesting that sales and turnover and consumer spending, these sorts of things, are pretty strong. The other element of that, of course, is that profitability's been improved. So that's good news for the stock market, good for the bottom line of firms. And the spillover into hiring intentions is something that suggests to us that the unemployment rate, which has crept up a little bit over the last year or so, will probably start to top out pretty soon, perhaps below 6%. And if this trend continues for the next couple of months, by the middle of this year, we should have a lower unemployment rate than we do today.
Stephen, what do you make of the positivity and the cause for that?
Yeah, look, I think it's a couple of things are critical. First of all, interest rates are very, very low. We know that. The last rate cut occurred in August last year, and that's filtering through into spending, borrowing and profitability. The other element, of course, is the lower dollar. We're at 90 cents, or a bit low today, and a year ago we were at 105. So that 15% fall in the Aussie dollar is helping the export sector to do well. It's helping firms that compete with imports to do well. So that's another critical thing. And the other one, which is more of an animal spirits type measure, is the fact that the election's gone. It's been and gone, and politics has settled down. Well, at least it seems to have anyway.
And when asked to identify the biggest barrier to the growth, the most common response, 35% of respondents said no major barrier. That's exactly what you want to hear.
It is. Again, I don't want to be too optimistic about this survey, but the number of firms that are saying that they're setting their sails for economic growth and for expanding their businesses has been one of the most positive that we've seen for several years. If that continues, and it looks like the Reserve Bank will keep rates low for at least the short term, and the Aussie dollar will stay at these levels for at least the short term, then perhaps we should be thinking that the economy can grow above 3%, certainly higher than what the Treasury was suggesting in their most recent publication, and that suggests to us that there's going to be better news ahead. The only downside, I guess, is that it suggests that the Reserve Bank have finished with their interest rate cutting cycle, and we're likely to see interest rate hikes during the course of this year. So those businesses and consumers with a mortgage and with debt are probably going to have to pay a little bit more interest this time next year.
OK, and just quickly to finish off, Stephen, what are you looking at beyond this survey? What are you looking at hard data in the next couple of weeks to get an indication of the Australian economy?
Yes, we get the data flow starting, all including this week. We get the retail sales numbers, international trade numbers, but perhaps most importantly for interest rate settings, at the end of this month, so in about 2.5 weeks, we get the December quarter consumer price index numbers, the inflation numbers, and the Reserve Bank Board meets in early February. If that inflation number is a little bit elevated and things like the retail sales match the numbers that we're seeing in this business survey, and that the economy is a little bit stronger than people are thinking, it wouldn't be at all surprising to see the Reserve Bank moving to what we might call a tightening bias, and that is setting up the community, setting up the financial markets for the prospect of higher interest rates.
OK, Stephen Koukoulas, thanks very much for that analysis this morning.